Welcome back to Gold Seek TV. I am here with the president and CEO of Fortuna Silver, Jorge. Pleasure to have you on a very exciting moment in the gold and silver industry.
Peter, thanks for the opportunity again to speak with your audience.
Well, the main topic on everyone's mind in the last week or two is the gold price is obviously making a very big breakout move higher to record levels. Silver starting to get more interesting. It's moving to the next kind of key technical resistant levels, and it may be on its way higher too. But the gold and silver stocks are just still not really responding to this. So what is going on? Are we finally at a point in this price move where the gold and silver miners are going to start to make some serious profits, that the margins are expanding? Are we seeing now a phase in this bull market where the gold and silver stocks can finally grow their profits and see some good profits come in from all their efforts?
You know, you hit it right on the nail here. I think to bring general market attention, the industry needs to show expanded margins, right? And the global gold mining industry, all-in sustaining cost hovers around $1,400 per ounce. We at Fortuna, for example, have two mines operating today at around $1,100, $1,200 per ounce, as per our guidance. So we are currently seeing at today's spot, 1x margin over AISC, right? So those are the type of margins that start getting people's attention, right? The industry, just like everybody, has over the last year seen mounting pressures from increasing prices on consumables, services, that have taken a toll on our margins, no? And this move in gold, and hopefully we see even a stronger move in following on silver, will expand our margins, and that's what we work for, right? The challenge for us now is keeping a lead on cost as prices continue, or underlying commodities continue to rise.
I think you helped to educate a lot of investors in the last months and years about this issue, because it's very easy to look at a chart and say, wow, 2011 gold was nearing 2000. Mining stocks were multiples higher than they are today. So the question of costs is absolutely the key to all of this, that inflation drives the gold price higher, but also drives your mining costs higher. And that this last few years, especially, those margins have been getting compressed as the gold price has been sideways. So now with the gold price starting to move quite aggressively, it appears that it's moving faster than the price inflation, but there still appears to be another wave of inflation. Do you see, you see energy starting to move, commodities? This will still put some pressure on price costs, I would imagine, for mining companies. It's not a simple gold's going up $200-300 and that's pure profit margin.
No. And again, the challenge for us in the mining industry is to keep a lead on our costs, keep running lean, and to capture as much as we can from the margin. We have no pricing power, of course. We mine a commodity, and we have to focus on what we can control, keeping lean corporate structures, driving productivity, and in our case, we've been seeding ourselves for the past years when mining was really out of favor. We're starting to see some attention coming back in the sector. I speak with and interact with investors really across the globe, and you could only see the same faces, no? The dedicated precious metals funds, no interest from generalists, no new money coming into the sector. And I think that's been starting to change, starting a few months back. And we need to be now good stewards of capital. We need to keep disciplined with the business, focus on operational excellence, productivity, to help, as prices rise, maintain healthy margins.
You mentioned in a prior interview what it would take to match those margins that we saw for mining companies at the peak in 2011 when gold was near 2000 and mining costs were under $1,000 an ounce or so back then.
Yeah,
So
I can make reference to our particular case in Fortuna. In those days, we were selling more silver than gold in those years, back in 2011. Our all-in sustaining cost was around $10, give and take.
Mm.
We were selling silver at $30 at a time, right? So it was 3 times margin over all-in sustaining cost. It was like printing money, right? The margins of the business were tremendous. So if we fast forward to today and try to equate it to gold, if we think that the average 50%, the average, half of the world's gold mines operate at an AISC of $1,400, that will mean what, gold trading over $4,500, right?
mm-hmm. Multiples higher.
Around
So
$4,500. Right?
it really shows, the issue at hand here with the price inflation showing up very quickly for mining companies, and now with the gold price moving higher, it's hopefully in another expansion mode where it could start to produce some serious profits like we saw in the past. So to match those, you need probably a gold price, you said 4,000 plus an ounce.
Yeah, three
Yeah,
times over
times
$1,400, $1,500, that'll take you to $4,500, right? Per ounce of gold. That would match what we saw in 2011, which was a peak. No, that's where we got to. I am not in the business of forecasting gold prices, but I can tell you that I think everybody is focused on cost on the side of the mining companies. These years have made the business leaner, no, and even looking at a rise in our underlying commodities, we should be in a good position to capture a lot of these expanded margin driven by higher prices. In Fortuna, in particular, we've been seeding the company for a time like this over the past years. We've been doing things that were not very popular at the time because our shareholders were risk averse. They didn't want capital projects. In this business, you have to be a contrarian, Peter. You have to invest when people are not investing, and you have to harvest when people want to invest. So a challenge that we'll see is that as prices rise, everybody and their dog will want to build a gold mine. And this is an industry that's full of structural bottlenecks. There is only so much manufacturing capacity for the equipment that we use. There is only so much manufacturing capacity for the goods that we consume. There is only so many experienced mining people, which, manpower, experience, it's been an issue the industry is being contesting with. There is a clear shrinkage over the last decade on mining enrollment at universities. Many universities shutting down their programs. So now, if we want to expand the industry, it's not going to be that easy.
There's a lot of challenges. not just outside of finding deposits to mine. So you have an actual issue among personnel and like you say, the actual physical items needed to build a mine and the technical know-how and knowledge that takes a very long time. Now speaking with geologists, I know that it takes decades to build up enough experience and develop the knowledge. This is not something that you can train certain skill sets overnight. It's a long-term process. So it seems like not just for the gold mining industry, but the entire mining sector, a big challenge for the future. How about on the deposit side? I mean, since 2011, you've had the price come down, you've seen margins squeeze, so there's not been a lot of incentive to go explore, develop. Exploration has been very quiet. A lot of companies just starving for capital. So I would imagine overall there's a big issue also on the ability to expand the amount, what assets out there that you could develop.
A lot of companies have grown not by discovery and true expansion of ounces produced, but rather consolidation, for example, right? So if anything, the space of mining companies has gotten even smaller. The latest one, and we have a few. We had some years ago a major one with the Barrick Gold acquisition. So then we had more recently the Newmont Newcrest acquisition. So if anything, the universe of mining companies, precious metals producers, has gotten even smaller, right? There has been underinvestment in exploration for years. And and I think it's definitely much harder than today to bring a deposit and take it through its stages all the way to production. From the permitting side, the time it takes to permit. Forget about discovery time, right? We know those are long, and there's been underinvestment in exploration. But now the time to permit a new mine and the costs that we face when we want to move those into production. So mining has always been challenging, and it is what it is. But certainly, in our particular case, we've been working to seed ourselves and our shareholders for a moment like this, and I think we're in a good position.
Well, let's talk about Fortuna Silver's position. You recently came out with quarterly numbers. The headline looked a little problematic because there was a big write-off, which I would like for you to help us understand that. But the actual cash flow numbers, the cash coming into the company is very healthy. You reduced debt again last quarter by over $40 million. So you're really seeing some good margins, especially with your new Séguéla mine. So let's look through where things stand right now. Last quarter, the large write-offs, what does that come from? Mostly, was it from the anticipated closure of San Jose mine?
Yeah, our headline number on earnings per share was a large loss, but the market was capable of looking well beyond that, and we performed very good on the back of those financial results. The results were well received by the market because, in spite of an accounting loss on earnings per share driven by a non-cash impairment charge at one of our mines that's coming to the end of its reserves, we did generate very strong free cash flow from record quarterly gold production. In the third quarter of the year, let me go back to the third quarter, we generated $70 million of free cash flow from ongoing operations. In the fourth quarter, we generated $66 million of free cash flow from ongoing operations. What have we been doing with that strong cash flow generation coming in the second half of the year of 2023? In the third quarter, we paid $40 million on our credit facility, bringing down debt. In the fourth quarter, we followed again with a $41 million payment towards the facility. And in the early months of 2024, late February, early March, we advanced another $25 million payment towards our facility. So what is our debt to EBITDA ratio today? Very low, 0.2, 0.3, and we expect to be in a net cash position this year. So talking about margins, talking about what this and in the fourth quarter, we sold the gold, Peter, at $1,990.
Okay, so
Today,
that was my next question. So how would that quarter, that's an extra $200 on what was the production level? It was about 100,000 ounces?
we produced on a gold equivalent in the fourth quarter 136,000 ounces.
Okay, so it's kind of easy to extrapolate that the cash flow is really starting to accelerate.
In this business, every additional dollar of sales is just goes direct to the bottom line, right? After taxes and all that, of course. But the point being is, the company did have a non-cash impairment charge at the San Jose mine in Mexico. This is an ever-depleting business. Mines get depleted, and we have been depleting the Mexican mine, and we are on the last year of reserves now. And that is what has triggered the impairment charge. It's a non-cash impairment charge of $90 million. But we continue exploring, and we have an exciting discovery we made there. It's called the Yessi vein. So we still need a bit more time to see if that exciting discovery turns into an exciting resource. But we're doing the work. We currently have 3 drill rigs turning and all of that. But the important thing for the shareholders was to see the strong free cash flow generation of the business and how we are allocating that capital.
So let's talk about what the allocation going forward. If you are reducing the debt, you say you're gonna have overall net positive cash position this year. It's getting to the point where you're in a very healthy. Your balance sheet's looking very healthy, and it's just getting better and better. So you're investing in a lot of exploration, and you have some quite exciting exploration targets going on right now. But maybe step back one bit from an investor standpoint. If you are producing so much cash flow and there is kind of an interest in dividends, is that maybe coming into play down the road? I know you mentioned in the past it doesn't make sense for the company to issue dividends without being in the right position. They have to be meaningful and so on. Are we getting closer to maybe a position where Fortuna becomes a
Yes,
dividend?
return to shareholders is topical, but to put it in the context of capital allocation, our priorities are clear. We have one, we believe a mining company should be run with a fortress balance sheet. No? As we have no pricing power, we cannot just be at the expense of higher prices. So we need to have a strong balance sheet. And that allows us to weather swings in the metal prices and to capture opportunity and seize the moment when it appears, right? With respect to a good accretive acquisition, a new development project. So that is a priority number one. No? So we want to see Fortuna with a very, very, very low debt level. That keeps our banking partners, lenders engaged, but no. So we believe we'll be in a net cash position sometime this year, and you should expect to continue see us allocate those cash flows coming from the business towards continue bringing down debt. No? Second is funding our organic growth. We have in our pipeline a lot of exciting opportunity. This year, we have our largest exploration budget ever. It's right now stands a little over $40 million that we're investing in exploration across the portfolio. That funds over 200,000 meters of drilling in several of our properties, right? And we can talk about those later. And last but not least is return to shareholders. We have in place a normal course issuer bid, a share repurchase program. We have not been executing on the program because we had a temporary restriction from our credit facility that has been removed in January. So you should expect to see Fortuna active on its a share repurchase program. And right now, those are the priorities.
And so I mean, from the management perspective, you see the stock as being quite undervalued at this point. That it's a good opportunity to reclaim some of those shares for the treasury at these levels to re-engage a share buyback.
We have the share buyback program in place, and again, we were restricted, and those temporary restrictions have been removed. No.
Okay. So that's back there. Okay. That's I know that was something last year announced. So that's something that helps I guess pick up some of that excess share that's at these cheap prices. I mean, looking at your market cap and then the cash flow numbers, and now with gold moving up, I mean, from the investor perspective, it just seems extremely undervalued. But of course, a little more bias as a gold investor watching all these stocks just absolutely decimated. So one thing that a company like yours can do is to help support it through a share buyback.
Yes, the buyback program is important. It is coming to its renewal in May, and we expect to renew it and have it in place. And yeah, I mean, looking at capital allocation priorities and opportunities in the market, you should expect to see us active in the market.
Now, with the exploration side, you said over $40 million in exploration budget. You have some really interesting exploration going on, in some news out recently from West Africa. Looks like another discovery east of the Sunbird deposit at Séguéla. So if you give us some insight to what that looks like, how does that incorporate into potential? Well, yeah, I guess maybe it'd be good to talk about the whole area, because there's multiple, looks like satellite deposits or discoveries occurring at this very exciting gold project. So
to help your audience gain some context here, at the Séguéla mine in the Ivory Coast, we have a commanding land position. We control 30 kilometers from north to south in a belt of faults, structures, and rocks that is proven to host significant gold mineralization. At the heart of that belt, in the middle, we have our mill, our newly built milling facility, and 6 deposits today. We have Antenna, Ancien, Agouti, Boulder, and Kula. Those are the 5-6 deposits that make up, and Sunbird, no? With that, it makes 6. The deposits that make up the mineral resource for the mine and from where we draw reserves. But in addition to that, we have multiple gold occurrences in the property that we are exploring. Badior, Barana, Kestrel, Gabbro North, multiple. And are all of those going to turn into a mineral deposit, into a reserve? Not likely, but some of them will, we hope. And that's what we are drilling. And this new mineral deposit we announced, Kingfisher, speaks to that. And just to remind you, our largest resource today sits at the Sunbird deposit. 2 years ago, Sunbird didn't exist. Over the last 24 months, Sunbird has been developed from a prospect into probably our largest resource today. And Kingfisher, it's an emerging one as well that we're quite excited about because it appears to have strike length of over a kilometer, and still early days, but we're excited about it. We're drilling, and let's see what the drill comes up with. But I think the important thing for us is beyond Kingfisher and Barana, Badio Orchestral, we are able to generate lots of optionality for us on the exploration side. Every year we're seeing new prospects emerge, and again, not all of those will become a part of a mine plan and reserves, but having that optionality allows you to see with a bit of success with the drill bit, some of them will, right?
You're not short of targets at this point. You have a lot of property to go explore. And
we have a lot of property. We have to be methodical. So we have some drill rigs working on the known deposits, and we have other drill rigs testing the emerging gold occurrences. Again, it's a big property package, 30 kilometers, and lots of gold occurrences. So I think we have years of work ahead of us until we fully untap the true potential of that area. That I call it a mine camp, right? Because it's very rare that you see a company that can control so much good land. No, it's not that common, no. And in other places in an area like that, you could have three mining companies. No, here we have a lot of room to play. We have a commanding land position, and that's very exciting to us. Years of exploration ahead of us, and a strong opportunity for discovery.
And if I'm not mistaken, this is your lowest cost operation in the company, right?
Today it is. In the first half of the year, in the second half of the year of 2023, we were mining under $800 per ounce AISC.
Wow.
And cash cost was under $400. Now, we already guided 2024, and we're seeing costs more in the level of $1,000 to $1,200, which I believe is a better reflection of the mine moving forward from the AISC perspective. $1,000 to $1,200, $1,000 to $1,200. That's more sustainable. Those cost ranges for this one operation. But again, as we were saying at the very beginning of the interview, today that offers us 1 times margin over spot price, right? At $1,200, we're mining probably today closer to $1,100, a little over 1 times AISC, right? Which is a very healthy margin for any business.
Yeah, very, very healthy cash flow. You also had some news out on rather recent acquisition up in the Ivory Coast. Maybe just give us a little update on what that's looking like and how the exploration.
We like the Ivory Coast for business. It's a great host country that likes and values responsible mining. So we feel very good there. And we acquired through a joint venture a large exploration property package in the northwest of the country. And yeah, it's early stage exploration there but it's another large land package where we're gonna be testing some ideas we have. And that is in the Ivory Coast. The other one we have, which is a big lever for growth for us, is in Senegal, right? The Diambasou project in Senegal.
Sorry, yeah, that's right. I meant to miss Senegal. So that That project was acquired last summer or so from an Australian company. The acquisition closed.
We made an acquisition in September of 2023 of an Australian junior explorer named Chesser Resources, and Chesser had a most exciting property in what is one of the most productive gold belts in West Africa. It's the Mali-Senegalese shear zone. On the Mali side of that shear zone, across the border from us, you have world-class deposits like Lulo, Koto in the Barrick portfolio, or Fekola, owned by B2Gold. On the Senegalese side, which is where we are, we sit at the core of that belt on the same geology and structures that host mineralization across the border. So we currently have our largest exploration budget is allocated to that property. We have $11 million in exploration, funding over 45,000 meters of drilling. And that property has a resource that we label historical. So we have not incorporated those ounces that amount to about 850,000 in our inventory. We're treating it as an appendix, as a historical resource, until we complete our drilling, enhance our understanding, and hopefully have the opportunity to grow it, right?
And that's a process that takes place. You think for this year, that would be the target?
We have a well-funded, and going back to capital allocation priorities, right? We have a well-funded exploration project that would, through 2024, towards the end of the year, be able to provide us with much more clarity with respect to the final size of the, not final, because exploration will continue, but a better handle on size potential and structural geologic controls, right? We need to enhance our knowledge of the ore body and see how big it gets, right? Today, as I said, on the historical research, it has about 850,000 ounces, mostly inferred. We have the idea that needs to be proven that it can be a bigger deposit.
Well, maybe as a final question closer, I'd like to ask maybe back on the market situation. You've done a lot. There's been a lot of growth at Fortuna for the last years. You've really grown the production, and you found some really excellent value out there. The sector still is quite cheap. There's a lot of a lot of juniors out there struggling, haven't really gotten going with the gold price. So is there still a window here to look at some potential other acquisitions? Or is that some, do you have your plate full or with all these different projects, or?
We're always looking out there, and as you were asking about Senegal at the beginning of your question, and I replied to you on a property in northwestern Ivory Coast. I think we done a joint venture with an Australian junior on the north end of the country. It's a sizable land package. So, doing transactions, doing acquisitions doesn't mean doing large corporate transactions where you're betting the farm. And no, perhaps we take less financial risk with higher geologic risk, because these are, early stage exploration. But I think as prices continue rising in previous cycles, we think investors, unfortunately, motivating management of companies to transact and do deals and show growth through acquisition. And that's not necessarily always what needs to be there. Because a lot of these investors or shareholders or people who come to the sector want to show growth, but they're not really investors. We see a lot of speculative money coming in and pushing management teams to do some let's say, aggressive acquisitions.
Hmm.
And I believe that the more methodical approach to growth is usually what allows you to be a better steward of capital, right? Yeah.
Hmm. Yes. Well, you've been very selective, and history of Fortuna has been one where you make these sort of deals when other companies do not. So you're not being pressured to be doing something
But
that
it's
goes.
difficult, Peter. It's very
Yeah.
difficult. It's easier said than done to be counter-cyclical. You
Hmm.
know, I was speaking with a colleague a few days back on our move to West Africa. We moved to West Africa in 2021. We certainly are not a trailblazer because there's been tremendous success stories in West Africa. We've seen, Randgold to begin with,
Hmm.
Endeavor Mining, a very successful company, and you know, Perseus and other companies that have done well in West Africa. And we moved to West Africa in 2021, and it was difficult. It was not well understood, well
Hmm.
taken by the market. It was a difficult market. And but today we see Peter Maroon from Yamana doing taking over Ally Gold in West Africa.
Hmm.
Uh, we see the London Group making an acquisition or taking a controlling position in Montage Gold in the Ivory Coast and talking about expanding in West Africa. And all of a sudden, more and more interest on West Africa. Well, we did it 3 years ago and built a mine, and our flagship mine is in West Africa today.
Yeah.
And, but we did it at a time where people were risk averse, you know.
Hmm.
So we were counter cyclical in a way in doing that. And today we're well established in 3 countries, 2 producing mines. Our best margins come from West Africa. Our growth is coming from West Africa right now. So, you know, but it was very controversial with the investor community, with the analysts at the time. No, but we thought it was a good long-term decision and one that's paying off today. So I think we've been uh, ratified on our thesis.
I think so as well. I mean, the numbers are showing the results of this. The record production, cash flow is really kicking on nicely, and I mean, I understood Rock Skull story before the acquisition, so I knew that the value potential of those assets. But it was a bit, yeah, when you announced that acquisition, moving to West Africa, it was. I remember the controversy, and boy, he did take a lot of heat for that.
Oh, it was difficult. And it's challenging to stay the course when the market is telling you, through the value of the shares that,
Mm.
no, we think you're wrong. We think you're wrong, right? And I still see Fortuna not, like you were discussing, looking at our multiples on cash flow and everything still being discounted against our peers. Because it's been a difficult market and we've been doing controversial things on a difficult market. But I am an investor in Fortuna. I am not a trader or a speculator in Fortuna, and I have nothing with trade against traders and speculators. That's their business, and that's fine. But I'm a long-term investor in Fortuna. So I'm willing to take a long-term view. And as I said, today we have very strong cash flows compared to some of our North American peers, for example. All right. At these prices, we have a very, 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 very healthy business.
It's great to see it grow, and congratulations on all the success recently. I think now the gold market is going to help to represent, show that off more. The interest in mining companies is going to return, and as a shareholder in Fortuna, I expect that to be even better recognized. I think in some of the past cycles, Fortuna has been a leader, leading the other mining companies. But it's also depending on timing where you are with building, the business. So you've built up a lot of stuff here during this down cycle, this difficult period. So I think that positions a company very well to be a leader here.
We feel we have positioned ourselves for the future, and we have our business is running on all cylinders, and it's showing in the free cash flow generation, which is what matters at the end of the day, right? So
that's key with mining. That's cash is king. I think that's a key headline to look at. So with that, I really appreciate the update, Jorge. That's a lot of good information to help understand this general sector and the mining sector, but also Fortuna, where it stands. I look forward to seeing you hopefully at a conference in the near future in person again, and
absolutely.
maybe be celebrating some higher gold prices finally. It's get a little better mood at these conferences. It's been rather depressing and sad and just left
It's
for
been,
dead.
the precious metals investors over the last years have been put to the test. No, when I meet, we arrange meetings with investors and shareholders. I start saying, but if you're here in this taking this meeting today, or you're probably by definition a contrarian, right?
Yeah.
So the precious metals investors have been put to the test, and over for the last few years. And let's see if this time around we have a more sustainable, rising market for precious metals. But what I want to offer our investors or shareholders is this: we all believe gold, silver should be much higher. I personally, at a personal level, I subscribe to that. But I don't run Fortuna thinking of that. I want Fortuna to be resilient and a good business throughout any precious metals price cycle. So if we believe that gold is going to go higher, silver is going to go even much higher, that's fine. And if you invest in Fortuna thinking of that, be sure that if your thesis takes longer to materialize, or in the meantime you have to withstand swings up and down in the metal price, the company you invested in is sound and can provide the optionality until the day comes, right?
Right. And it's looking especially at, say, my exploration investments during the difficult times, they just dilute so heavily just to kind of keep the lights on and not adding value. And, it's such a difficult thing. So being able to survive and maintain value for the shareholders during the down cycles where you have low cost operations to do that, that's a huge risk mitigator in the sector, which does carry a lot of risks. And
Yes.
so.
Yes, no, definitely. That's important. A company that can thrive in any price environment. And those are the ones that provide the optionality.
Well, thank you, Jorge, for the insights. Look forward to catching up with you again soon, and we'll hopefully be able to celebrate some higher gold and silver prices as the sector seems to be coming back alive here, in a very interesting moment for precious metals investors who don't have been watching everything else take off in front of them, like Bitcoin, crypto, Nvidia, all these hot sectors, all these bubbles, and it just, you try to play your logic, and you're not rewarded, you're punished for it for a while. But I think if you hold on, I think now we'll get a nice up cycle, a reward cycle. So let's see how this develops.
Thank you, Peter.
Thank you, Jorge.